All right, hello everybody, and welcome back to another edition of Batting a Thousand. This is our last edition for season 2. We've had some incredible guests, and today is no different. As you know, we interview the heavy hitters in the mortgage industry, and today I've got an incredible guest. Melissa Langdale is with us, and Melissa is the president, the new president. Congratulations, by the way, Melissa. That's exciting news of the Mortgage Collaborative, sometimes referred to as TMC. If you don't know who the Mortgage Collaborative is, you should, because they've been on for a long, long time. I'll let her explain that to you. But just to give you a little bit of credentials on Melissa, she's been in the business over 20 years. She has been in all kinds of different capacities and roles within the mortgage arena, from area manager to RVP to being basically running the VP of operations for a very large lender in the country. And she's got a lot of knowledge on what it takes to succeed in this marketplace and the challenges that lenders face in 2023 and the opportunities in 2024. And that's exactly what we're going to talk about today. So, Melissa, welcome. It is so good to have you.
Thank you so much for having me. I'm excited.
It's absolutely my honor to have you here. And let's begin. Let's just begin by talking a little bit about the Mortgage Collaborative and what you guys do, what you stand for, and help people understand a little bit about the cause that you guys have and what you're doing to change the mortgage industry on a regular basis.
Yeah, I would love to talk about that. I actually joined the Mortgage Collaborative as a lender as I was building out a mortgage company for a community bank in North Carolina. And what kind of blew me away and what really got me hooked was I walked into my first conference and I showed up for this thing called a collab lab. And if y'all don't know what this is, I'm going to tell you what it is. It's really, really cool. Everybody signs NDAs. It's an executive kind of roundtable where you walk into the room and you share everything and anything about your business.
Awesome.
And it really helps executives across the country be able to bounce ideas off of others that have either tried new things or maybe looking to reinvent either workflow or kind of looking to optimize their balance sheet. A million things, everything and anything about their business. They share it with each other to help each other to grow. And that's one of the things that makes TMC so unique, is that we create these experiences and these opportunities for executives across the country to really get together and to help each other to grow their businesses. And that's why we're called the collaborative, even though we are a mortgage cooperative. We're very intentional about saying that we're a collaborative just for that reason. It's our members, the information that they share, the network, the relationships that they build that really makes us unique.
That's awesome. And we talked beforehand. I've got a couple of really dear friends and longtime clients, Owen Lee and Elson Johnson, who both served on your board. Incredible people. They can't speak highly enough about TMC. And I love the Christmas setup you've got. You guys just went through the 12 days of TMC. Talk about that a little bit, because you do that every year. It's a really cool event. Talk about that and how people can benefit from that.
Yep, I don't have my Christmas tree up in January when this is considered, so I'm not quite that crazy. Just for everybody that's here, we do basically 3 conferences a year. We do 2 in-person conferences, and then we do 1 virtual conference, which we call the 12 days of TMC. We're also not crazy. It's not 12 full days of conference material. It's just a few hours in the afternoon. We have a keynote, and then we have breakout sessions to help people to collaborate. In fact, this year we're doing something really unique. We're doing our first ever solution sprint. And we're tackling some of the industry's biggest challenges. Like for right now, increasing day one certainty and AIM utilization without increasing cost, as most, kind of mortgage executives across the country are realizing right now. The cost of credit reports, the cost of verification services, all those things are just continuing to add up. And so we're tackling that as a network, and in a very fun, competitive way. We're going to talk about how to open up inventory in the markets that we serve. And then the last one is around creating operational efficiencies to be able to really keep our team at highest and best use. And there's a ton of technology out there that's helping to facilitate that. So those are the things our solutions front is tackling. But we have, This is a unique conference in the sense that we have everybody from a loan officer and a processor on the call, all the way to C-suite executives. And so we really have a variety of content to make sure that they all kind of get something out of it. And it's a fun way for our entire network and their employees to get involved in something. So it's a lot of fun. In fact, this is our biggest 12 days ever. We have about 3,500 people registered for it.
Wow.
So lots and lots of
Wow.
fun excitement going on around it.
That
So
is
this is
awesome.
not up in January.
Well, and I saw that you had your keynote was my dear friend Brittany Hodak.
Yes,
We all
yes.
love Brittany. She's awesome.
Gosh, she's just amazing. I
Yeah.
love her story. She's this brilliant mix of customer experience,
Yeah.
brilliance and this kind of fun personality. So she balances those two things really well, which is a lot of fun.
Now, if we could just get her to be a little more enthusiastic, we'd probably
Oh,
be, in good
right.
shape. She is a fire plug. I love chatting with her.
Love
All
it.
right, well let's dive right in. You mentioned some really key things a moment ago, where I want to kind of focus and channel this conversation. We just are finishing up 2023. It's been a very rough year for the mortgage industry. Been a very rough year for a lot of lenders and originators. Although I will tell you very honestly, we work at Mortgage Champions with 27 different lenders across the country, and some of them are having their best year in 2023 they've ever had. Most of them are only about 30% off of 2021 numbers, which is kind of crazy. And that just proves the point that there's plenty of opportunity when you do it right. Now 2024 is coming. Everything's trending in the right direction. Rates are headed down. The Fed's pulling back. Inflation's improving. Inventory's getting better. House starts are way up. So we're seeing, more and more and more new construction happening. We're seeing more of a buyer's market versus a seller's market. All of these things point to a really great 2024. And then I think a stellar 2025 and 2026. So you are in the trenches talking to lenders every day about their challenges. Let's begin by talking about what were the biggest challenges that you saw in 2023? Give me three of them. And then what are those solutions? What are the things that your members are doing to overcome those?
That's a fantastic question. Okay, three biggest challenges for 2023. I'll chunk it down to rising cost of origination,
Hmm.
operational capacity, and kind
Hmm.
of ensuring that companies are kind of maintaining that based on volume, and
Yep.
that really is based on their profitability, right? They're kind of adjusting capacity needs based on volume, and that affects their bottom line. So,
Yep.
um, and then the last would be growing market share. There's a lot of opportunities, I think, for lenders. You mentioned it. You've got a ton of your customers that are growing in this marketplace, and I think there's a lot of opportunities for lenders that are innovating, that are looking at new ways of doing things, both from an operational workflow technology perspective, but also their sales model, how
Yep.
they're helping their loan officers to grow at the same time. So, cost of origination, working on their bottom line and operational capacity as a result, and then looking at growing market share through all of it.
So let's begin with that first one. Let's begin with the cost of origination and improving the way that you've got your system set up. I've had a lot of conversations with a lot of executives and high level people about this very topic. When you really break it down, to me, there's only three ways that you improve cost of origination. One is cut costs. That's your expense reductions. Well, just about everybody's done that one.
Yeah.
We've seen major layoffs. We've seen a lot of cutback on things. And sometimes people are cutting the wrong things and sometimes they're cutting the right things. I think the second is commissions. You got to reduce commissions. That's a conversation I want to have with you to hear what you've heard from lenders. I had Garth Graham on this year. We talked a lot about this at the beginning of the year that, based on where projections of production has been and is going, there has to be a case in point that at some point we got to pull back on commissions in order to create profitability because Last time I looked, it's over $11,000 to originate a loan in the mortgage industry.
Yeah.
That is just not, as the old saying goes, that dog don't hunt.
Yeah.
We got to make sure we understand that.
Yeah.
And then the last thing, and this is the one that we focus on the most with our lenders, is conversion, is improving that conversion rate by improving sales process, improving operational processes. So let's walk through those for just a minute, and let's begin with that first piece of it: cost, expenditures, cutting costs. What are some of the great things that you have seen lenders do to create cost cutting that has really helped their business to succeed, that maybe is a little bit out of the box?
We've seen people rethink workflow altogether, right? That kind of traditional LOA processor model, for example. We've seen a lot of people looking at kind of adjusting that to fit their existing workflow as technology continues to evolve and systems continue to provide efficiencies. There are things like that lenders can do to try to help create some efficiency in their overall process, and some of that even affects a better customer experience by having kind of one
Yep.
point of contact throughout the process. So there are things like that individuals are looking at doing today. You hit a lot of really important points of there's kind of workflow design, there's technology stack, there's LO compensation. All those things um, go into the cost of origination. uh, Over the last several years, technology has not quite evolved as much as customer expectations have
Right.
evolved.
Right.
You guys know, especially in COVID, right? Amazon completely blew up, and they were doing fantastic before, but now
Oh,
everybody's like, I can just order something and have it delivered to me in 2 hours on my phone.
yeah.
Why in the world does it still take 30 days to get through the mortgage process? And so a lot of our lenders are rethinking their overall process to try to shorten that time
Yep.
frame, significantly, to just better meet customer expectations. And they're looking for technology to help them to do that in an efficient way. I will tell you that the challenge is you end up, and I know this, a lot of your listeners know this. You end up with your core kind of loan origination system platform, and then you're like, oh well, customers need this, and we need this extra
Right.
thing on top of it to help it to
Right.
be a little bit more efficient. And so you end up with kind of almost band-aiding your kind of core platform to meet customer expectations, to kind of
Yep.
help um, you know provide efficiencies in your workflow too. And so that definitely drives up the cost of origination, to go back to our earlier point. And so everybody's thinking about things like that. How do we rethink workflow? How do we rethink kind of customer experience to help give our loan officers tools, and how do we do it in an efficient way from a technology stack perspective?
And so, what does a lender need to do? What is the process, and what are some of the best practices to create a better structure within that? You were a VP of operations. You know this inside and out. I've said to every client I've ever worked with as I consult C-level executives and mid-level managers, look, your biggest cost within the operational capacity is duplicative efforts. Anytime you got duplication, you're paying twice for the same thing. And
Yeah.
you got to get rid of that. You got to understand where your duplication happens. You've got to create more uniformity in your application system. That's where things like online applications are very, very beneficial, because they create a uniform process. We don't have, as I always call it, the napkin application that, a lot of retail loan officers are guilty of. Here's a name and a number. They want a loan. Here you go. Have at it. And, and you mentioned something I think that's really important earlier, and that's the LOA processor relationship. I can't tell you how many times I've sat down with clients and I've said, show me the job description for an LOA and show me the job description for your processor. And I look at them and go, it's the same job. It's
It's
just a little different that they're taking a little more application information. Why don't you merge that into one position and put a little bit more emphasis on the originations team to get more documentation up front, so that there's less of that they have to do on the back end? So give me some thoughts on that, because I know this is a great area of expertise for you.
Yeah, well, that whole processor LOA, you hit the nail on the head. But the reason that they're separated in a lot of cases is verifications.
Right.
They want kind of this, significant separation between sales and operations. And, you
Right.
know, our industry has had a ton of fraud over the years, and this, helps companies to kind of mitigate that risk. But as our industry continues to evolve and technology continues to evolve, that whole direct to data connection with verification platforms really reduces a lot of that risk. And so
It
lenders are
does.
starting to rethink, okay, we actually need these kind of check the checker layers in our process that really slow down the process, add extra costs from both
Yep.
it, you
Yep.
know, um, an employee standpoint. You're having to have all this extra head count in order to just get a loan from A to Z. And so it's those type of things that lenders are rethinking, and you hit the nail on the head that that particular role, that LOA processor,
Mhm.
has traditionally been the the easiest thing, I guess, for people to see that is really a check the checker moment. And so a lot of lenders are just rethinking what that looks like in the future now that they've got kind of a lot of direct to data connections with verification platforms, even though those are very costly right now.
Yep. No question about it. So, talk a little bit about you mentioned earlier something really important, and that is the whole day one certainty and the costs that are going up on credit reports, title reports. I mean, you name it. It's everything is going north instead of going south. And you said you guys had, a collaborative of people that were talking about that, of lenders and executives. Tell our audience, what came out of that? What were some of the solutions and ideas that came out of that? Because that would be pure gold to the listeners.
Yeah, I we're still in the midst of it. So it's
Okay,
a we our presentations will be December 15th. And I know this is going to air after that, but we'll
right,
have a press release that goes
good,
through
great,
all of the solutions that were
awesome,
presented. And just to make sure that the industry is aware of some things that people can do on a regular basis to help. That particularly is I think has been a challenge for our industry and has a lot of potential opportunities for improvements over time. For example, today, day one certainty and AIM both utilize this kind of direct to data connection that in a lot of cases requires the customer to log in to some platform.
right,
And so anytime this kind of layer of password, customers having to share their password with their lenders in the process, they automatically get this, kind of pause of, okay, well, how much of my data are you gathering? How
right,
often are you going to pull it? Like, do I need to change my password after this? Is this really safe for me to do, in other words? And so, I think what's been holding back data uncertainty and AIM utilization is really the customer being comfortable and confident in sharing their data throughout the process. So I think there's going to be continued opportunities for us to find better systems for customers to be more comfortable with sharing their information, or lenders getting it directly, from sources without necessarily needing that customer layer. And it could reduce fraud for the industry as a whole too, right? If lenders are going direct to data, direct to IRS, direct to payroll, direct to
right.
all of those things, you naturally reduce the risk of a customer leveraging generative AI to create a pay stub or a W-2, or all of those sort of things that are in our space right now, and lenders are having to deal with. So
It's a little mind-boggling, isn't it?
those layers have been in our space for so long, and
Yeah,
yes, generative AI can help with creation of some of those things, but frankly, whiteout and
yeah,
a typewriter could have helped with those things back in the day too. So
yeah.
those layers will always be in our industry.
So you talk to lenders all over the place, and you've seen the same thing that I've seen. You've seen the lenders who are doing very well in this market, okay, and they're kind of like, well, I don't get what the problem is. You see the lenders that are just freaking out,
Yeah.
and they really don't know where to go. Okay, here's my question for you: the ones on this hand, the ones that are really doing well, okay, tell me what you're seeing in them that is making them successful. And from any vantage point, from mindset, how they think about the industry and the business, methodology, what they're doing to make differences. Give us a little bit of insight on what you're hearing from those top producing lenders are some strategies and some things that they are implementing that is making a difference?
Some of this probably won't be rocket science to you, but we, a lot of our lenders that are growing right now are doing it with really experienced, purchase focused loan officers, right? And we've talked about that as an industry for years, right?
Yep.
That is the kind of the foundation that a lot of successful mortgage companies live on, and that's where we've seen our lenders continue to grow, is that they're really focused on hiring some of the best. They have a fantastic recruiting program. They have a fantastic marketing platform to be able to support those loan officers. And they have reasonable expectations from a compensation perspective. Most of the loan officers that are out there today recognize that there's
Yep.
a balance of being competitive in the marketplace with kind of compensation models at lenders, and they want the lender to be reasonable. I don't think anybody's coming out of the gate these days and saying, hey, I want to make 200 bips on a loan
Right.
and be priced out of the marketplace, right? So I think most everybody right now, as long as compensation is reasonable in the marketplace, they're going to be fine, but they're really looking for tools. They're looking for tools to be successful. They're looking for a fantastic operation team behind them that they can call on at any given moment to give answers, give updates, move the process through really, really quickly. So again, I don't think any of that's rocket science. Those are things that, top producing retail loan officers across the country have been doing for years and years and years.
Well, and you're right. It's not rocket science, but you said a couple of very important things there that I want to unpack now. So you started by saying very experienced purchase loan officers. Okay. And the thing that I pick up in that, and I talk about this all the time. In fact, I just did a speaking engagement both at AIM, Fuse in the month of November, and then did something again at the Lenny Tree Summit. And I talked about this on both places. Specialization. It's so important today. The companies that I see that do well, they don't have a loan officer that handles purchase, refi, HELOC, all of it. It's the jack of all trades, master of none. And that's not what referral partners want. They want experts. They want specialists. So the fact that companies that are doing well have purchase specialists, they also have refi specialists that are experienced in that product. They're not crossing over. They're focusing on doing it right. How much is that playing a role in them being successful, you think?
I mean, I think you hit the nail on the head. I mean, obviously, everybody in the marketplace today is looking at purchase business, with the kind of rare exception of maybe a cash out refi or an equity line, like you mentioned. But the majority of the market, obviously, today is purchase, and so you know referral partners, realtors, in some cases, financial planners, divorce attorneys, those sort of things are all looking for individuals that can help them to ensure that their customers are well taken care of. And it really does take somebody that's in that space all the time to understand all the layers that goes into the purchase cycle. All the layers that the realtor has to deal with, all the layers that, if they're going through a divorce, for example, that they have to deal with. And it takes somebody to understand that whole process.
Yeah.
You got to be in it every day to understand it. So
Yeah.
I totally agree with you that the you know focusing in on one particular area can be really, really helpful, and is really driving a lot of top producing loan officers across the country to continue to be successful right
Yeah. And I think it's important we define what experience is because, if a lot of times when we think about the experience, for example, purchase specialists, a lot of those people are close to retirement now. If you look at the average age of mortgage originators, particularly in the distributed retail market, it's close to 60 years old now that
now.
many of them are, and they've made a lot of money in years. They don't necessarily have to work. So you got to find the people that are still hungry, still got that fire in the belly. No matter what their age is, they've got a runway ahead of them still that they're going after. Because if you're getting them in the twilight of a career, they might not, even though they may have been very successful in the past, it doesn't mean they're going to be very successful in the future. You need
Yeah.
somebody in this market who's very driven because it's a market where, the realtor's business is much slower than it used to be. You have to have a much bigger network than ever before. These are all essentials to this process. So when we talk experience might only be 5 to 10 years, but it's 5 to 10 years of high production where they've done it again and again and again in their proven entity. And I think you said the most important thing there, because I get this question a lot from leaders about recruiting. Okay. When you're recruiting, who are you looking for? We have, I hear a lot from leaders. Well, I get guys who want big signing bonuses, or I get gals who want to come in and, they want this high basis point percentage. I don't see that very much in my conversations. What I hear a lot is, I want the tools. I want the technology. I want the marketing support. I want the education. I want a great ops department that backs me up. These are the things that seem to matter more. Would you agree with that statement?
100% agree. I want to go back to one thing that you said too. You mentioned all of the things that loan officers have to do today to be successful. In this cycle, particularly, not unlike, although it is a little different, not unlike 2008, 2009, loan officers are having to do more in order to get the same amount of business. And I have seen, that kind of either younger generation or kind of, you mentioned like 5 to 10 years of experience, those that have enough experience that they're knowledgeable, they're driven, they're willing to pivot and do, try new things. And they're the hustlers, in
Yeah.
this space, for
Yeah.
lack of a better word. Those are, and it may not even be that they're working 90 hours a week, right? They're leveraging technology to do more with less. They're creating great marketing platforms. They're in systems. They're creating teams behind them that can keep that kind of wheel churning, so that they're constantly at highest and best use. And so the companies that figure out how to support those loan officers, it's going to be a lot of fun to watch them grow.
Yeah, it will. So let me ask you a question then. Let's talk about a different perspective on personnel. Um, I started in the business. I've been 40 years doing this gig. I started in 1983, and for 12 years, I managed all the way up to running a national mortgage company with 900 loan officers and 2,300 employees. So had a little experience before I got into training and consulting on dealing with salespeople and operations people. And interestingly enough, my philosophy of hiring was the same for all 12 years. If you had 1 day mortgage experience, I wouldn't hire you. I only hired people off the street. I only hired people that were go-getters, hustlers, that wanted to learn, that wanted to grow. And in those days, you could do that very effectively. Okay. Now, fast forward 2023, 2024. Okay. I hear from a lot of clients, you know what? I don't think that's the way you can hire anymore. And I always push back on that and go, I don't think you can hire 100% like that. That would be a challenge. However, if you have a core of experienced leaders that are in your originations team, and you can bring in people who are hungry with today's technology that helps aid a lot of what they do, with today's opportunity to network so much easier than used to, and with their understanding of things like social media and how to communicate in different ways. Video is a huge way to communicate today for today's marketplace, because that's what people are used to with all of the reels that everybody watches, and TikTok's the biggest thing on the planet. So do you hear or much from your lenders about bringing in new people and training them from the ground up? Because at some point you're going to have to do that. You can't always hire experience, because then you're just cannibalizing your own business. Talk to me a little bit about that mindset and that thought.
That's always, it's always a struggle. There is a space for those hungry individuals to definitely partner with top producers, and I have seen some of our lenders doing it. In fact, we've had a lot of requests. We have a platform called TMCU, which is our TMC University, and that, we're building out kind of a mortgage essentials product within
Yep.
that, because we keep hearing from our lenders that they really would love to be able to take advantage of that opportunity to bring
Yep.
in new to the industry folks for a lot of reasons. The speed of innovation in our space today is really, really fast, and having individuals that can come in with a different perspective and have different, insights on, like you said, how to leverage social media, how to, do video and do reels, and shift kind of the marketing strategy is really important and really valuable to organizations. But there has to be kind of a way for them to have a baseline knowledge
Yeah.
build in the process. And so partnering
Yeah.
them with, with folks like you said, that are experienced leaders that can see the opportunity to grow as they bring in this next generation, could be really, really impactful for
Yeah.
an organization and for that leader that's bringing them on.
That's good. Building a partnering, mentoring kind of philosophy, having utilizing resources like you guys have and we have, where we're training loan officers every day from the ground up how to do this. And I'll tell you something that will kind of shock you. And I've worked with over 700 lenders in the 27 years I've done this, and we're usually working with about 30 in any given year. And this year in 2023, the top 3 clients that I have that have made the most money, produced the most business, and have the highest units and dollars per loan officer are all refinance only, believe it or not. And they are all 3 consumer direct. And
Okay.
they all 3 have gone by the philosophy of, we're bringing people in off the street. We're not hiring experienced people, and we're training them from the ground up. So there is a case for that says it can work.
Yeah.
If you really have specialists who are well trained, but each of them also has a mentoring program, just like you're talking about, where they have experienced people that have done it, that they can put them side by side, they can coach and mentor them. And what they find is that those mentors actually do more production, not less, because they're kind of showing off in front of the rookie. Is what it comes down to. So there is a case for that, and I think the services you guys provide and hopefully that we provide are very valuable in doing that, because that's where I think the market's going to go in the future. And certainly consumer direct, it's easier to bring in people off the street than a distributed retail, because you're talking about long relationships that have been forged with partners, referral partners. That's a little different game.
Yeah.
Although I will tell you, I love to share the story. There's a lady that I trained a year and a half ago at a large bank, fresh off the street, never been in the mortgage business. And I trained her on just open houses. I said, just go do open houses and you'll be successful. Lo and behold, in I think it was August or September of this year, it was her 11th month, and she had $4.6 million in production in her 11th month. And I said, how'd you do it? She said, I go to 6 open houses every Saturday, and that fuels the fire for the entire rest of the week. So there is business out there if you go after it and do it.
Yeah. Yeah, I can
All right,
see.
let's talk about technology a little bit more for a minute. AI's coming. We know that. What
It's
do you
here.
think? It's here. Yeah, I should say that. But it's coming more and more and more to the mortgage industry. What do you think the impact is going to be? What do you see as the pluses and minuses of AI?
Gosh, there's a lot in that. So, obviously AI is here. There's a lot for lenders to think about, both from how do I leverage it appropriately in my organization? How do I understand really the risk that our organization has? And then, it, how do we continue to innovate at the speed that consumers want and leverage that to be able to do that, but also not just build a front end engine that's really, really fast. How do I leverage it to produce quality loans and to
Yeah,
sell them faster? And so, there's ways to use AI for all of those things. I see it today as there's processes that mortgage has built. For example, underwriters. You bring in a brand new underwriter. What do? You put them through a QC process. Of course, you don't
right,
just tell them they can underwrite FHA
right.
loans with no guidance. So there's things like that lenders are really starting to think through. How do I leverage AI in a way that keeps my team at highest and best use, but also allows me to keep a pulse on what's working and what might not be working from an AI perspective. Not a lot of lenders are considering kind of decisioning through AI. They're mostly considering, how do I create kind of operational efficiencies, scenario desks, for example, for their underwriters or their loan officers. There are some technology providers that are in our network that are looking at ways to either create transparency in the process with consumers as they're going through a mortgage, with kind of task creation and document review faster and things like that. That is fantastic. They're improving customer experience, but they're not really relying on it for decisioning. They have kind of human in loop processes or QC processes where they're kind of testing the systems. I think the probably our regulators, our GSEs, are a little nervous about AI because there are so many things that it is capable of, especially as it learns more and more and more over time. And really, there probably will be eventually expectations of lenders that they're going to be kind of held accountable for the decisions that they're allowing
Yeah.
those systems to have, but we'll see where it goes. They're held accountable today to underwriter decisions, right?
Yeah.
And so I think there's going to be a lot that's evolving, and it is evolving really, really, really fast.
Yeah.
We spend a lot of time talking about it with our lenders. In fact, I created a group that is an innovation focused working group that spends a lot of time talking about AI. It's called Spark Lab. Just helping everybody to understand the difference between kind of basic business rules that you build in your system that creates kind of a little bit of operational efficiency to, AI, and then generative AI that really needs kind of large language models that you're using for some level of maybe income calculations or, but it's not like full decisioning, but it has the ability of digesting information and providing significant data to the process.
Okay, good. It's interesting because I've got a very good friend of mine I've known for 25 years. He has been the head of some very large lenders, technology departments. He is just a whiz when it comes to all the technology. And we had a conversation about AI, and I learned something from him that I never knew, that there's different places, I guess, you can get AI from.
Mhm.
And what their company does, he's now running his own company. What they do is they go in and they'll take questions and they'll put them in and they'll match the four, and a lot of them are incorrect,
Yeah.
not even close to correct.
Yeah.
And then one is closer, and then one's the actual number that you'll get. And they're constantly screening through to get the right and best answer all the time. So, there's a lot of efficiencies to be gained by AI, but lenders will have to be really careful, because I know this was the number one conversation that I heard at the Lending Tree Summit when I was speaking at that.
Yeah.
That was a tech conference for all intents and purposes, and AI was the rage of the conversation. And
Yeah.
some people were really excited, and some people were scared to death.
I
And
know.
it was such a wide scope that I saw.
Yep, you hit the nail on the head. It really is data in. Like you've got to have a big enough language model and a really good system for
Yep.
helping AI to learn.
Yep.
And I think that's where the evolution needs to continue to go in the mortgage space, is that we have to be able to ensure that these platforms are learning the right way for a lot of reasons. You don't want a part of the process to unintentionally discourage a customer to not move forward because they don't have the full picture, or they're making the wrong decision, or whatever the case. There's like fair lending implications in some of this too, and so
Yep.
yes, you have to be able to understand the data that's going in. You have to have a good test process, to ensure that it's learning the way that you want it to learn too.
So let's talk about 2024 for a minute. What do you see from the Mortgage Collaborative? What do you see, and kind of, what is your outlook for 2024? Give us the good, the bad, and the ugly.
Well, if we all had a crystal ball, Dale.
Good point. That's a good start.
I'll just preface that, right? Hopes and dreams and wishes and unicorns and rainbows.
That's right.
I I think that look, our industry has been challenged over the last couple of years. I think challenges are actually kind of cool because they
Yeah.
allow for lenders and our industry to kind of rethink things. And
Yeah.
I think they've spent a lot of time rethinking things, and those that have really built a good, solid foundation of innovation as well as support
Yeah.
are going to be really poised in 2024 as that market starts to shift, and I think that it will.
Yeah.
That they're going to be able to take some market share when that happens. So it'll be interesting. I mean, look, at the end of the day, there's a significant portion of the of homeowners across the country that have interest rates that even if rates go down to 6%, won't be 5.5%, won't be refinanceable. And so, I don't think we're going to see a giant surge of refinance opportunities. I could be wrong. I hope for our industry that I am, but I think there's going to be a really solid purchase market in the coming year. I think you're going to see inventory, open up. Some of the builders that you've mentioned have kind of increased starts are going to start to hit the market in 2024. And so
Yep.
I think all of those things coming together is going to make for a good year.
Yeah, I mean, in the month of December or month of November, the statistics on new home starts was annualized at 1.37 million new homes. That's a lot of new inventory when you consider where our numbers are at right now.
Yeah.
So that should lag into 2024. We've still got some supply chain issues and other things that we're dealing with, but overall, I think that's going to be good. And look, from a refinance perspective, if we do get down in the low sixes, high fives, I mean, we've made a fair amount of loans. I mean, 325,000 approximate loans will close in 2023 at an average probably of 7.25% coupon. If you average them all out,
Mhm.
you get down to six, there's some opportunities, especially when you include in the fact that the average credit card interest rate is up to 27.8%
Yeah.
right now. That's the average. That's crazy. That means we got 35% credit cards out there. Home equity lines are 13, 14% a lot of times. So when you start looking at all those blended rates and putting all that debt together, and consumer debt is by far the highest it's ever been in US history,
Yeah.
while at the same time, equity is the highest it's ever been in U.S. history. So there's opportunities there, I think, for 2024. But I'm with you. I think we're going to see much better trending from what we saw this year. We had some major things that happened this year that we thought we were going to see that. And then we had the debt ceiling problem. And then we had the downgrade from Fitch. Just it seemed like one thing after another hit. 2024 is an election year. That's always a good thing. Good things happen in election years generally for the mortgage industry.
Historically, you're right. There
Yep.
is generally a lowering of interest rates in an election year. So we can all look forward to that.
Let's hope that really happens because we
I'll
don't.
get out my crystal ball.
Yeah, I don't want to hear any more reports in 2024 of hawkish comments. I'm so tired of that phrase, hawkish comments.
Yeah.
Seen that so many times.
Yep.
All
Yep.
right, so give us to kind of wrap this up from your perspective, two or three things that you think are critical for lenders to really be doing in the coming year and really be focusing on to improve their businesses. Um, straight from your book, from your playbook. This is some Melissa wisdom for everybody to have.
A lot of pressure on
No,
that.
no pressure at all. We know you've got the experience and the wisdom to share with that. So give lenders an idea of what you think should be happening in 2024.
I think with the market looking to shift, in the coming year, I think it's going to be really, really important for leaders to understand what their teams really need in order to navigate something like that, especially when staffing levels have been low and have had to be, lowered over the last, couple of years, right? It's going to be important for the leaders to step up and realize that their teams are going to need different things in a growing market. It's also going to be important to not to manage kind of expectations as the market shifts and try to leverage technology as much as they can to scale businesses without necessarily having the swings of headcount that our industry has seen over the years and needed to have seen to keep loans moving. So leverage technology, be fantastic leaders, and I think continue to build relationships in the markets that they serve. At the end of the day, you and I know we've been in this industry long enough that
Yeah.
success happens with relationships in local markets that you serve. Put you in front of the right customers that are ready, willing, and able to buy. And so, yeah, build relationships, be great leaders, and try to scale as much as possible with technology.
Okay, so let me ask you two final questions then on that. Let's talk about being a great leader. Define that for me. But from your perspective, you meet leaders all the time. You
Yeah.
see the great ones. What are the characteristics that you see in them that somebody can say, "Man, I need more of that"?
Yeah. Gosh, that's such a good question. Everybody defines leadership a little bit different.
Yep.
and am a servant leader kind of mentality
Me
that
too.
at the end of the day is about
Yep.
kind of bringing vision, being the compass for your team that they need, kind of showing them the direction the company has to go, and helping them and guiding them along the way to keep moving in the right direction. And I think as long as you're one step ahead of where your company wants to go, and you've got this really fantastic vision, you're a great communicator along it, and you are understanding and caring of the people around you. I don't know, that to me is a great leader.
I love what you just said there. That was pure gold when you said, "Be a compass for your organization." I think the Mortgage Collaborative should get a T-shirt that says that. I think that's a great because that's a great visual right there. Is you got to be the North Star as a leader,
That's right.
and couldn't agree with you more. If you're not a servant leader, you're not a leader in my book. Period. Because if you're not serving your people, then they think you're in it for yourself.
That's right.
And the moment they think that, they're not going to follow you anywhere. And I loved how you talked about the importance of communication, to have a vision, communicate it effectively, and make sure you're keeping that really positive mindset going forward. Because the thing that I see the most common in the best leaders is you just can't get them down. I mean, doesn't matter what the market does, they understand, you know what? It's what I call the pivoting concept.
That's
Okay, so that's a problem.
yeah.
Nothing we can do to change it.
Yep.
Let's solve it.
Yep.
Let's now take that problem, let's turn it into something good. Let's work through this and not look backwards. They're always looking out the front window. They're not looking in the rearview mirror.
That's right. And I think you just hit the nail on the head. That kind of perfecting the art of the pivot can absolutely help leaders, be that compass, right? Maybe the direction needs to move a little bit, but you just recognizing the fact that the same things you did yesterday in a changing market won't be the things that are necessary needed for your team in the future. And so
Yep.
I love it.
It's good. And then let's talk. The last thing is about relationship. You talked about that too. And, this is something that I talk about all the time. I've been a partner with ICE Mortgage Technology and that whole group for a long time. And I've spoken at their conferences year after year. I'm speaking again this year in 2024. And what I've really focused those speeches around is high tech, high touch. Technology is critical. You got to have it. You've got to be up to date on it. You got to use it for efficiencies. But what you can't use it for is building relationship and loyalty. You need people to do that. You need conversations with your customers, conversations with your partners that are value-based conversations where you really build deep relationships, really understand their needs, understand their goals, understand their challenges, and then solve those things. Give me a little bit more of your thought process on the power and importance of relationship in today's marketplace. Because a lot of people think, oh no, just build a great technology and go to town. But we've seen a lot of fintech companies fail miserably
Yeah.
where their whole mindset was all tech for the consumer, no personal relationship. And what I'm seeing is my top clients, it's all personal relationship.
I think there's a balance of it. I'll kind of play devil's advocate a little bit for us.
Please, yeah, do.
I think there's a balance, and you hit the nail on the head. What you were talking about at your ICE conferences, the balance of kind of high touch and high tech.
Yep,
There are places for technology to allow customers to have transparency in the process, to
correct.
be able to self serve as they have the knowledge and skill set and ability to self serve, and also have a high touch person that's coming along beside them and
Yep,
helping them to get through one of the biggest financial decisions that they're having to make in their lifetime,
yep,
and especially if they're doing it for the first time, right? And so there is that balance, I think, of allowing them to self-serve where they can, and being that resource to help them to think broader beyond, I just need an interest rate,
yep,
I had one of my loan officers, years and years and years ago, and he would have, this is like an age old question where customers call and they say, "Hey, what's your interest rate? What's your 30-year fixed rate today?" And he would always answer it with, "Well, what rate do you need?" I I have all of the rates. And it was such a brilliant way to
yeah,
just flip the conversation to say what's really important to you. And
Yeah.
I think as long as loan officers are taking that approach and being really consultative to customers as well as their real estate partners
Yeah.
and referral partners. The key is you got to have both sides. You can be fantastic on the customer side, but if you're not building relationships with your realtors, your builders, your financial planners, your divorce attorneys, those people that are continually, providing you with referrals, you're going to miss the boat because somebody else is going to do it in
That's right.
2024.
That's right. That's right. That's
Yeah,
right. Yeah, and just to clarify, in case I didn't make that clear, I am a huge fan of technology, and you have to have both. You're absolutely right. Couldn't agree with it more. But as I look at today's marketplace, it feels to me like you could survive better with lesser tech and higher relationship than you would with higher tech and lesser relationship.
100%.
Yeah, and you said something earlier that was important. You said, you got to know those customers that want to self-serve. And what I see in the industry a lot, and this year alone, I probably listened to over 400 sales calls with my clients because part of what I do, I'll train we'll train their loan officers, we'll train their leaders, we train their ops team. We work with the entire company to build a uniform selling system, operations system, and leadership system. It's all built around that servant leader mindset and serving your customers well. But then what we'll do is we'll do shopper calls on the back end to make sure they're doing the things that we want them to do.
Yeah,
And we've listened to call after call after call after call where the borrower was sent a link, but the borrower actually never asked for the link. They didn't really want to be self-serve. What the loan originator said was, well, I could take an application or I can send you this link, which is much easier. And the borrower's like, well, okay. And then I look at studies that tell me again and again and again, about 30% want to do the link and about 70% want to talk to a
that's
human being. And I think that's where we're missing the boat in the industry a lot.
Yep, I 100% agree. In fact, there's a lot of ways that loan officers can do that, and I think you hit the nail on the head. But they got to ask the question. They got to ask like, what's important to you? What
Yes,
would be
agreed.
important for you for us to have a 15-minute conversation and walk through this? Or are you strapped for time and you can do this on your own, and we'll sync after you fill out all your information. But I also think there's another layer where we really can leverage technology to help our customers to know that we actually know them. That at the end of the day, like there's a lot of industries that keep customers for a really long time. Mortgage has not been quite as successful. That
Right.
and for a lot of reasons, really, there's a giant period of time between their last purchase and the one that they're doing, the next time. But I do think there is an opportunity for lenders to continue to think about how do I keep a lifetime customer, and there's ways to leverage technology to pre-populate applications for them, so that all they have to do is kind of go in and just check and make sure that the information has not changed since the last time that you did a loan for
That's
them,
good.
making that process, those barriers of going through the application process, as easy as possible, whether they're doing it online or you're doing it on the phone. Breaking down those can make a big difference, I think.
Well, that's a great way to end the interview because that was gold right there. You're absolutely right. I mean, the reason we as an industry have not done a great job at retaining our customers because we don't stay in contact after the sale, after the close.
Mhm.
This is probably one of the things that I harp on the most with loan officers is, look, you're not going after one transaction. You're going after a lifetime relationship if you're doing it right. And all of those experienced loan officers we talked about earlier that have had, incredible careers, that's what they did.
Mhm.
I just recently, for our clients, we do a monthly video every month on sales where I bring a market update and then we talk about things that we think are important in the market. And I did an interview with a realtor who did over 500 sales in 2022. Now, that's a big time realtor.
Right.
And he actually worked with one of the loan officers that I trained. And he said, interesting fact, that loan officer has stayed in touch with me. We've worked together for 10 years now. And we sat down a couple months ago and we looked at a loan that we closed and we went down the family tree. And it turned out that that loan was the 51st loan originated from the first person that this loan officer had gotten the loan from with that realtor. 51 loans because she stayed in touch month after month, year after year. She said, I'm going to be your loan officer for life. And she meant it.
Yeah.
And Today loan officers think they're too busy for that, but technology can prompt them and guide them so that, look, here it is. It's right in front of you. Just make a phone call. No matter what you say. Hey, how you doing? How's things going? That's good enough. Just keep it in touch will make a big difference in that longevity.
Yep, absolutely. And I love, the phone call, just, hi, how you doing? How's your family? How are your kids?
Yeah.
Are the same things that are important to you, when we first talked, important to you today?
Yeah.
Yeah, all of those things make a huge difference.
Yeah. How'd the home improvements go? Did you put the addition on? Simple
Yep.
question. You'll talk for 30 minutes with them about that. And next thing you know, they're saying, you know what? I'm thinking about, I need more money to do this. And here we go. You're right back into it again.
Yep. I love it.
Awesome. All right. So let's close out with how do people reach out to the Mortgage Collaborative? Tell us a little bit about membership, what that entails and provides. I'm a huge fan of what you guys do. I certainly, anybody that's watching this, if you're not part of TMC, I recommend you become part of TMC. Talk to our audience about how they can do that and what do they get when they're part of the Mortgage Collaborative.
Wow. Thank you so much for that. By the way, they can always reach out. We have links on our website, themortgagecollaborative.com, that they can reach out on. They can always email me directly too. And I'll provide you my LinkedIn profile and they can reach out that way too. So lots of different ways to get in touch with us. Membership is really simple for our lenders across the country. You have one membership for your entire organization, have access to, 2 in-person conferences, 1 virtual, like we talked about, but a plethora of events throughout the year. And I say plethora, and it probably doesn't even do it justice. Every single week, we have 4 to 5 events that we put on for our members every week. We have working groups, collab labs, we have TMC Connect sessions. We do, the rundown with Rob Chrisman every Friday and Last Week in Mortgage Day, so they can keep in touch on the top news articles that are happening throughout the week. Like there is a plethora of information that we provide to our members on a daily basis. And then, those in-person conferences and the virtual conference where we put people into groups and help them to help each other to grow is really pretty special. And outside of that, we actually have started just recently an advocacy committee where we're building really strong relationships with agencies and regulators, so that as guideline change, as policy changes, that we can be a voice for our lenders as those sort of things happen, and we can put them at the table with the decision makers that are changing policy, that are changing guidelines, and help them to understand, help regulators and agencies to understand what that means actually to consumers. Because a lot of our lenders, they're boots on the ground with customers every single day. And it's really important for our regulators and agencies to have a good sense of what their policy changes mean to customers. So all those things are in membership. I could talk about it forever. I know you want to wrap things up. So just reach out on LinkedIn, our website. Would love to chat with anybody.
Awesome. Well, Melissa, you've been a delight. Thank you so much for being on Batting 1,000. Great advice and wisdom. We really appreciate that. I want to wish you a very Merry Christmas and a Happy New Year, and look forward to working with you again, hopefully in 2024.
That sounds fantastic. Thank you so much for having me. This was a pleasure and an honor.
You're welcome. God bless, and we'll see you soon.